Hey all, Tom Weller here. I got a question asked from a reader, a guy named Daniel. He mentioned in an email to me, he said, earlier in a video you mentioned that you traded successfully on the 1 minute and 5 minute charts before you became distracted by indicators. I think he's talking about my video on one of my first videos I ever did which was on how to trade for a full-time income. And it's the video people get for subscribing at my site. And yes, he's right. I actually did, when I first became involved in trading, I learnt how to trade. Well, that's basically the time frames I started on. I started on the 1 minute and 5 minute chart. And before I got, fully sucked into the media and indicators, I was successful on those time frames. And I actually used to make I was just doing micro accounts, but I used to make roughly between 150 to 200 pips per day. And I'm going to share with you, and I said Daniel in my reply, I said to him, it's a little bit hard to explain fully in an email. And I said to him that I will actually do a video on it, just to show you how it works. Before I'm getting into this video though, I wanted to highlight a couple of factors. I do not recommend trading the 1 minute or the 5 minute chart. There's a lot of noise on these time frames, and it's very easy to get on the wrong side of the trade. However, if you are going to trade it, you'll find that the success ratio is around 50%. Now, the reason that I made money on the 5 minute and the 1 minute time frames, as I suggest in that other video, was because I would always cut my losses early when I first was introduced to trading. In fact, I learned all my bad habits in pretty much the first 3 months when I actually started focusing on what other traders were saying what to do. And so anyway, I'm going to cut to the chase, and I'm going to show you how I traded when I had no biases, was not paying attention to anyone else, and I'm going to show exactly to Daniel how it actually worked. So first of all, I'm on the 4-hour chart on the Euro US. I'm just going to drop back to the 5-minute chart. Now, if you want to know how to trade this price action strategy on the 1 minute, then you're going to have to basically all you have to do is just take the same knowledge I'm going to share on the 5-minute chart and just convert it down a level. So I'm on the 5-minute chart here. Okay, so what I'm going to do now is I will actually jump up a scale. I'll actually jump up to the 15-minute time frame. Okay, so I'm on the 15-minute time frame. Now this is the key here. What you do is you draw in all the structure points here on the 15-minute chart. So you got, first of all, you got a structure here point that was a resistance, and you got a structure here that was a support here, and looks like it was being a resistance here. So then you draw all these levels in on, I'll just zoom out so I can see the complete structure. There we go. So you just draw out your chart and you pull all these down to the significant levels. And like I said, when you're drawing support and resistance, you'll often at times find that these support and resistances will be respected time and time again in the future, even years later. So, okay, now I've drawn all the support and resistance sort of structure, bounce areas and stuff like that on the 15-minute chart. This is where we drop back to the 5-minute chart again. And now I'll zoom back in because it's based on the candles to do this strategy. Okay. Now I'll just mark it so we can see bring the chart out a little bit further, and we can actually move back a little bit. And I'll just go a little bit back in the time frame. Okay. Right. So what I'm going to do is I'm just going to mark in how this strategy worked. Now, like I said, I used no indicators when I was first introduced to trading, and like I said, I was pulling roughly around 100 to 150, sometimes 200 pips out of the market. During that time, I was just learning how to trade, but I was only risking 10 cents per pip. But interestingly enough, I was still making around, you know, 10, 15, $20 a day, quite commonly. So this is what I'm going to show you, Daniel. I hope you enjoy this. And for anyone else that wants to trade the 5-minute chart, like I said, it is a lot more stressful. It is a lot less profitable than trading the high time frames, but it is still possible to trade. Now, this is the way that I did it, and if you ever want to trade this, this can work for anyone as well. Okay, so basically, it's similar to the high time frames. And what I used to do is I used to wait for price to move down, then produce like some bearish candles, then produce a bullish candle, and then on the second bullish candle, I would enter. I called the second bullish candle my confirmation candle. So I'm going to show you this in a nutshell, and I'll show you where I place my stop as well with this sort of trading method, and how it worked, and why it worked, and why it still works today if people want to trade it. So I'm just going to straight away indicate some trades. And all my trades were based off engulfings. I didn't know anything about pin bars back then. This was completely based off engulfing trading. And as you can see, as you know, I've shared my many of my engulfing strategies on the 1 hour and the 4 hour before in the past. And I actually have a product which you guys can also in the future will be able to purchase, which is based on engulfings if you want to see my full-on video and book on the subject. But that's another video, that's another thing to go over with you guys if you're ever interested in getting some full-on training. In this video, I'm just going to go over how it works on the lower time frames. So it's basically the same in a nutshell. So here's an example. I'll just give you some examples, right? So what you're looking for is a significant candle, first off. So here's a significant candle, yeah? Now what you do is you place your stop above the candle. Ooh. Okay, I think you get my point. Sometimes these lines are hard to do. Oh, there we go. You place your stop above the candle, the entry candle. You enter on the next candle, yep, as it's moving down. And I've mentioned this before on many different trades before, so this is basically an engulfing strategy. And see how that one went down 10 pips. Okay, this is, by the way, a 15 pip trade. Now, what I mentioned to Daniel was what I used to do in the past is I would actually lock in my trade at break even once it got to the same risk level. So it'd be locked in at break even here. Okay, so this was a break even trade. All right. Okay, so that's one example. That went down to 15 pips, it came back up. So once it gets to break even, you're always going for a roughly around more than 1 to 1 or 1.5 to 1 or 2 to 1 as your reward. So depending on how the chart moves. So that's a break even. I'll just put a B on that so we can get that. Okay, so this was down to 16 pips here. This was a 15 pip risk here, and we put it down at break even when it got to just above 15 pips, and then it came back up. Okay, so here's another entry. The second candle is significant. Okay, so your not that one. Bear with me, guys. Your stop loss goes here, and your whoops, actually this one's a bit wrong, sorry. Significant engulfing goes right here. And okay, so this one here, your stop is down here, right? Below the pin. Okay, so that's 13 pips. Okay, see how that just went to 10 pips and then sort of meandered down, meandered up, meandered down. Now, there is a significant sell candle here that one could have taken as well. You're still in this trade, by the way. Okay, so stop was here. Depends on the circumstance to where you actually put your stop. So you could put your stop here. You could also put it at the next candle above, right here. So I'll just do that. And that's how I often did it. I just put it above the previous candle. So that's that. Like I said, it was a two-step. And you enter in on this candle or at the bottom of this candle, like I've been saying, the significant candle. And that went down 9 pips. That's an 8 pip risk. That went down 9 pips. So that was obviously a break even as well. So let's put break even on this one. And this is what I was trying to say was about, you know, Daniel asking me how to trade the 5-minute chart. Well, it can be a lot more stressful because it's consistently a lot of break evens and a lot of small profits. So it's a lot of time consuming, a lot of watching, a lot of negotiating, but I mean, if you've got the patience, it's definitely a strategy. Now, okay, so this one here eventually does go into profit up here. Now I'm going to show you where you would get out. Like I said to you, you need to get out at least a 1.5 to 1. This was a risk of 14 pips. So that's, you're basically at break even here, just in this area here, right? Which is a good spot to be at break even too when you look at the chart here to the left. Okay. And about this candle here, see this red candle? This is a safe time you can get out because basically you're at double the profit, okay, which is about 27 to 25 pips. Remember, the risk was about 14 pips, so getting 28 pips was a good reward. So you could get out about here. Okay, so yeah, this is a possible exit, right? Right. And now see how this candle here, it's just not bigger than the previous buy candle. So, you know, that's not a candle you would enter on. It's not significant. If it was bigger, like if say it closed at where the pin is, you would enter on that trade. Because it didn't, you don't. Okay. So now, and there was a couple of entries along here that people could have taken. I mean, this was a significant candle. This was a significant candle. Here's another entry one could take right here. Your stop goes below the candle, or even better, just below this previous candle. And you want to go for, okay, it's a 7, and it went to 14. See, that's a 2 to 1 right there. So you would have locked in about here, 7 pips, and it did go to 2 to 1, which is 14. And like I said, it's not an exact number. 1.5 to 1 to 2 to 1 is okay. So if you get like a 12, you're doing good. So this is basically it in a nutshell. So your entry is after this candle here. All right. So, all right. So you get my point. You're entering here. Let me put that. Put that line on there for you guys so you can see it, like so. And I hope you guys understand that this is not a sell entry because this candle is not bigger. This candle is not bigger. This candle is not bigger than this. So this is what you keep moving along. Okay. So this is, let's put the ticks on the 2 profitable trades so far. We got a 2 to 1 nearly on that one, or basically 2 to 1, and we definitely got a 2 to 1 on this one. Okay, so I'm just showing you, like, basically this is just a way of analyzing the chart, and this strategy works on pretty much all time frames, by the way, too, guys. So, okay, here we go. Let's have a look at this. Okay, so see this candle here? It is a little bit bigger than this previous green candle. So it is a viable entry. Okay, so, and some of these entries are tiny, like the stops are tiny. Now, here's the interesting thing. Now I kept saying you put your stop below the previous candle. I mean above the previous candle or below the previous candle. You place your stop here. So which is like, so this previous candle was like a pin. Then this candle was bigger. So this is how I did it. And I called this the confirmation candle, by the way, as well. As you can see, second entry. Okay, second entry. Second entry. Second entry. And that was just and when it's just a completely significant candle, you can enter straight off that one candle, by the way. I just like, you like to put the stop below the previous candle, but the significant candle is the entry candle. Okay, so all right, so you enter there, you place your stop here. Sorry, not your stop. You place your entry here. So you want to enter only if it keeps going in that direction. So your stop is roughly 7 pips. And it did go down to 7 pips. So you would have been break evened out. So that's another break even there. Okay, so we put break even. Okay, so I'll just do to the end of this chart. I'll just do probably about 3 or 4 more, and I think you guys will get the point. You keep doing this. As you can see, we've had no losses yet. Okay, but we will get a sequence of losses sooner or later. Okay, and break evens, well, that's just part of the strategy, part of any engulfing strategy. So okay, so here we go as an example. Here's an entry, this one here, and because it's a significant candle, you can enter on it alone. Significantly bigger than the last previous 3 candles. Put your stop here. You put your entry here. Okay. Hard to do sometimes. Okay, I think you get my point anyway. Alright, I'm not even going to include that one. You get my point. Just after this candle, you enter. Right? And so, you know, it's a just over 8 pip candle. And the market went up 6 pips. So this was a loss. Okay, so you took an 8 pip loss here. Bam. Okay, so next trade. Here we go. On to the next trade. So this is a significant candle. Where do we place the stop? Just above the previous candle. Right? Okay, so this is how it's done. Right, you enter here. What's this stop, by the way? 11 pips, 12 pips. Didn't go down 12 pips. Okay, went to 24 pips here. Yep. 23, 24 pips. This is it. This is a perfect 2-to-1 on the 5-minute chart. Using price action, like I said, engulfings. Okay, and see how I'm not really looking at support and resistance that much, but I do take it into account more so than not. So this was a brilliant one. Okay, we lost 7 or 8 pips on here. Oh, including the spread, it could be 11 pips. Or depending on how much your spread is for Euro US. Okay, so, and then now we just made 24 here. Okay, so this is a significant candle here. Alright, you place your stop below the previous candle. So your entry is about here, which is 9 pips. Did it go up 9 pips? Oh. Let's have a look at this. This could have been just a stop out, or yeah, it looks like to me it was just a stop out. Like, it's borderline. I'm not going to call it a break even. I'm going to call this one, you just lost 8 pips. It's a borderline. It could have been a just break even, but it's too close to count, and the spread as well. I would say it's a loss. Okay, so you've got this one here. You place your stop above, and you enter this candle, right? Because it's significant. This candle here is bigger than this previous candle. You've had the first candle here, and it's just a good candle. So from here, you enter, and what you're looking for, this is a 10 pip risk, so you're looking for a minimum of 20 pips, and that would mean that you could quite comfortably, around the end of this candle, see this candle here, it started at less than 20, and then when it got down to 32, what you do is, instead of actually closing your trade, you just put, this one closed at 30, just above 30 pips, so what you do is, instead of that, because it was a 10 pip risk, you put your stop loss about here, just above the previous candle close, right? And you let it run. That's 18 pips, right? So here, see how it closed here? You put your stop just above here. Then as the market keeps moving, you place your stop above here at 30 pips. Then if it keeps moving, you place your stop above here for 41 pips. That's a 5 to 1, guys. I mean, that's a 4 to 1, guys. And then if it keeps moving, we're at 50, hold on a sec. And as it keeps moving, you just keep placing your stop above. And see, you would have been taken out here at 44, around 40 pips, just above 40 pips. So that was a 4 to 1 there, guys. So, all right, that one did well. In every chart, there can be a successful price action pattern that you can follow and you will make profit. But you've got to be willing to accept losses in order to make profit in any strategy, no matter what time frame it is. And the engulfing strategy is a proven, really good strategy that works a lot. It just seems to work a lot. Okay, here's an example. Okay. So I wouldn't take this, reason being is because this green candle, because these candles are still quite big. And if you look to the left, it's still lining up with this candle. However, when it comes along here, now I wouldn't take this as well because it's not bigger than this candle. So they're sort of cancelling each other out, right, in a way. This candle could have been okay, right? Could have been a buy. And if you took this buy here after this candle on this next candle here, that definitely would have been a loss. Now, I'm not going to include that. Let's put it in anyway. Actually, no, you wouldn't have taken this. Sorry, I just realized you wouldn't have taken this candle here because it's actually smaller than this previous red candle. It's always got to look to the left. Now, when you get to this candle here, on the other hand, right, this candle here, it's bigger than this candle, it's bigger than this candle, and it's bigger than this candle, and it lines up with the same sort of size of this candle, but it does not have this red candle in the road anymore because it's sort of been side candled apart. So now what you do is you enter a trade, you place your stop. It doesn't have to be just a tight one. Like I said, you place it below the previous candle, which is the red candle there. Okay, and you, what's that? Okay, it's like 10, 11 pips, right? If you're looking for a good broker, I recommend brokers that have a spread of just above 1 pip. You know, Oanda has a spread of 1 pip. Or if you like eToro, it has a spread of 3 pips. You've got to take that into account with different brokers. Sometimes you have to take less profit with the risk reward because the spread is higher. Depends on what sort of broker you've got. Okay, so this went up to 16 pips, and we were risking 11 pips, right? So it went up to 15, 16 pips, and that means it was past break even, and then it started to fall down. I mean, you could have gotten a couple of pips out of this, a couple, right? There was no reason you didn't have to let it. Let's see if I can. Your entry would have been about here. There's no reason not to get a couple of pips. But if you don't, it's just a break even. It's not such a bad move. Okay, you know what I'm trying to do. It's a little bit higher than that, but I'm just, it's these little things can be hard. Ah, there we go. Perfect. Okay, so this one here is significant. So you know the rules of this strategy. You just enter the trade. You place your stop above the previous candle, and you go for a 1-to-1 to lock in, break even. So this is a risk of 7 pips. We got down to 7 pips here, and we got down to 14 pips down here. So that was a 2-to-1 down there. So you could have perfectly gotten a 2-to-1 here, and so that's a tick. In fact, these are both ticks. They both did quite alright. Okay, so here, this was a good candle, bigger than this previous candle. This candle's in the road. You could still see this candle, so you might have wanted to stay out. However, you got another good sell candle. Now, see this red candle? You wouldn't have entered a sell here either because it didn't close lower. And you're also in this trade here. So you enter a buy here. I'm just about to stop, guys, by the way. I don't want this video to go too long. And we'll just go over the results. Okay, you get my point. Significant candle, you place your stop below the previous candle. As they're all the same, you just place your stop below. And yeah, so let's have a look at this. Entered here, which was 6 pips, went to 6 pips here. It did come back down to break even, so you would have been tapped out at break even, and then it kept going. So this was a complete break even one. And it's one of the break even ones where it's sort of just, it came back and hit your break even. That happens, guys. It's just part of trading. It's better to set break even than to not use it, what I've found over the years overall. Okay. And I mean, here's a significant candle that looks like it was definitely a loss. So place the stop here, just above, actually not so high. Yeah, like that. Right, so on this red candle here, you entered, okay, so your stop was about 7 pips, and you were taken out about here. So this was a loss. And no, not significant, it's not significant. Significant. Oh, this is a significant candle because it's quite big and it actually goes below the lows here, right here, and this one would be accepted with this strategy, where you place your stop below the second, as you know, above the second candle. The placing the stop is probably the most important bit. Okay, place the stop there. You enter down here, and which was basically an 8 pip risk. Counting the spread, it could be 9, and there you go. You got a 2-to-1 down here. Even before here, it's basically a 2-to-1. And so when you came down here, you can choose to just either lock in a lot of pips, or you just take profit. And so you got your 2-to-1, and that's how it builds your account. It just keeps building your account doing that. As you can see, I'll just do one more for you guys. Just another one I can see that looks quite good here. You see you got this nice candle here. It broke below all this junk here to the left and closed down here. This is a good entry by itself. So you just place your stop here. Okay, you enter here. Always analyze the risk. It will never be much on the 5-minute chart. Okay, it's an 8 pip risk. And that's a 7. Wow, okay, so interesting enough, I thought that that'd actually be a good trade. That was actually a loss because it never even got to break even. Now, what you do as well, what you can do as well is if you're finding this strategy, like multiple times it was below, but if you're finding this strategy to not spend so much time on this strategy, you can actually use a break even function or an EA. So yeah, it's basically put. So that's a loss there. Let's have a look at this now. All right, so I'm just going to count these. You had 1, 2, 3 losses. How many break evens? 1, 2, 3, 4. That was a win, that one, wasn't it? Okay. So, how many trades was it? So, let's have a look. The successful trades were, you know, as you can see, we've got one successful trade here. We had another successful, oh, this was a break-even trade. one profit trade here, one trade here. All the ones with ticks are successful trades. So you got 1, 2, 3, 4. Wait, 1, 2, 3, 4, 5, 6, 7. 7 successful trades here, as you can see recently, and one of them was actually a 4-to-1. This was a 4-to-1. That was actually more than 40 pips, and this one here was a what was that? 22 pips. Okay, so I think you can get the idea. This is basically how I trade the 5-minute and 1-minute chart, and I did this before I even knew anything about trading. Like I said in that first video, and it's just a nifty little way you can trade the 5-minute and lower time frames and make a good little bit of profit. Okay, well, thanks for watching, guys. If you have any questions, feel free to comment below on this post, and yeah, I'll speak to you again soon. Okay, bye for now.